All right, hello everybody. Welcome to Q&A with Melonport team with Mona and Rito. My name is Jake Brookman from CoinFund, and we do a lot of we study a lot of blockchain technology projects, and also have a private investment vehicle in focusing on the crypto asset class, and we love to engage teams early in their work on their projects, kind of understand where they're going and how they fit into the trends of the space. So in relation to this particular project, I think one of the interesting things is that the space has kind of realized that there's a potential and a need for better investment tools, and particularly in the area of investing in multiple kinds of cryptocurrencies and crypto assets. And I see the space kind of forming these three areas. One of them is decentralized multi-currency wallets, right? So these are things like Lawnmower and Exodus. One thing is private funds. So we see I think about 10 or so that I've heard of, and probably a lot more in actuality, people kind of going into a more traditional fund structure to invest in these kinds of companies and assets. And then the third prong is what I call DAMPs, which is decentralized asset management platforms. And so last week, as I just said before we went live, we did a Q&A with the economy team. So the economy team is a DAMP, if you will. They have put out a paper about kind of creating a platform where you can trade multiple crypto assets and create portfolios of those, and also having a managed fund under their purview to get investor returns. And there's also been sort of other projects in the past that have focused on Ethereum-based multi-currency portfolios, such as Etherplan, which today is one second, I'm going to turn off my Slack here. Which today is sunset. So Mona and Rito, please introduce yourselves and tell us a little bit about Melonport and how you're thinking about this vertical.
Sure. So I'm Rito. Yeah, sure. So I'm gonna dive right in what we are building. Okay, so it always takes about a minute to explain, but I hope you're a little bit patient. So okay, so if you look at the big Bitcoin blockchain, so kind of to have this decentralized database yes, essentially we have this decentralized database where you only can add or modify the database if you adhere to the protocol, right? So okay, so we have this decentralized database, then we have kind of Ethereum, which kind of takes this concept and puts logic on top of it. So we have kind of decentralized database plus logic, which is kind of a computer. So we have this decentralized computer, where you only can kind of use this computer if you adhere to the Ethereum protocol. And where like smart contracts on these computers or on this blockchain can be seen as software running on this computer. And what we are at Melonport building is essentially the software for asset management, where you only can manage your assets if you're within the Melon protocol. And we're building this protocol in a way that it's very, very difficult to embezzle clients' funds. So that's essentially the purpose of the protocol. The same way you have the Bitcoin protocol to not kind of add $1 million to your account, or the Ethereum protocol to not kind of hack the computer, essentially. Yes, so that's essentially what we are building. Then kind of the problem we solve with this is we drastically reduce barriers to entry. So we kind of have these slogans from months and millions to seconds and cents. because traditionally to set up a portfolio is extremely difficult. With our protocol, it literally takes you a few seconds and a few cents. So if you have internet, if you have some sort of computer device, and if you have a few cents, you're going to be able to set up a portfolio and essentially build your track record. So especially in this space, and I guess in your group, a lot of people are doing this anyway, and they're managing their crypto portfolio anyway. Our platform kind of enables them to build a track record and let other people basically participate in their track record.
So what is kind of like the overarching goal here? Is it more, is it to simulate, traditional portfolio management and advisory services on the blockchain? Is it more aimed at kind of the users of blockchain technologies and investors in crypto assets? Like, who do you see as the customer there?
Both. So like for these big traditional hedge funds, money managers, they have a lot of overhead in costs. Like a protocol like ours can reduce drastically their costs, as well as just essentially it reduces costs for everybody who wants to have this sort of crypto portfolio. So this is we lower barriers to entry, then we are open. So using blockchain technology, the track record is open. It's using a protocol means like we have this kind of standardized way of auditing essentially. So there's very little room to kind of cook the books. Plus all of our code is going to be open source. Yes, so we have decentralized, we have open, we have lower barriers to entry, we have open, and we're decentralized. So we're never going to ask you to trust us. We never hold your private keys. And yeah, open source, we don't even ask you to trust our code.
Cool. So you mentioned that there are high costs to kind of doing this in the traditional world. Can you talk a little bit about what those costs are and how using Ethereum or just blockchain technology in general brings them down?
Sure. That's probably a question Mona could better answer. But I mean, it's essentially like this technology is kind of so empowering for a lot of spaces. So I mean, just to give an example, like I actually wanted to do a hedge fund. So I looked a little bit into it, and I essentially to do just a managed portfolio at UBS kind of was minimum capital requirement of $500,000. And kind of having all this understanding of blockchain technology, like I knew there had to be a better way. So essentially, we're building this better way. So
one of the issues is portfolio size. Like if you want to go with a traditional manager or something like that, usually the buy-in level is like high, right? Or you need to be like a high net worth individual. You're saying it's kind of not available to long tail like retail customers or something like that. Is that correct?
Yeah, absolutely. Like you have to have a sizable amount of capital. And what we are enabling is basically just you only need to have a few cents and you already can build your track record. And once you have a good track record, that we believe will attract investment. So you actually you can have this kid that lives somewhere at the edge of the world would never have the opportunity to ever have a hedge fund. Our technology kind of enables this kid, gives him an opportunity. So we essentially open up the talent pool.
Hmm. So there's also like an element of competition, right? Because it's open, and kind of what you're saying is that anyone can come in and
Absolutely, yeah.
become a portfolio manager.
Absolutely, we believe by lowering the barriers to entry, we foster an environment for competition, and we believe this environment for competition will ultimately yield better performances.
Mm-hmm. Mona, do you have thoughts about kind of efficiencies that you gain in going into a blockchain-based implementation, such as the one you guys are suggesting?
We can't hear you, Mona.
Can you hear us okay, Mona? Oh. Maybe just try reloading the page. So while Mona's coming back, oh, here she is.
Sure.
Hello, can you hear us? You can hear us, but we can't hear you. Okay. Technology. Do you have like Skype or some other program open that's using your audio? Okay, well, Rita, while we wait. So why did you guys go with Ethereum over some other smart contract platform, or just building your own blockchain for this purpose?
Yeah. So in our opinion, Ethereum is kind of the most advanced platform today. Building our own blockchain probably would be a bit much. Yes, but ultimately, yeah. I mean, ultimately, we're only building a protocol, so this protocol could be deployed on other blockchains as well.
Mm-hmm. Do you see kind of the ability to migrate to another platform as sort of useful to the product, or is that not like a core kind of issue?
Yeah, it's definitely useful. Like the same way, I think like if you just want to see the idea of Ethereum succeed, then it doesn't matter if it's Ethereum or Ethereum Classic. If you know what I mean? Mm. If you just really like, or even Bitcoin, if you just really like blockchain technology, you're probably not against Ethereum, because that's just an extension of it. And
right.
I think we're kind of the same way. We just want to see this idea succeed. So yeah, I mean, this move, this space is evolving so quickly. That yeah, who knows what's going to happen in a few years.
Mm-hmm. Mona, any luck?
Can you hear me now?
Yes, awesome.
I just used Safari. I don't know if that's the difference. Anyway, I had some thoughts. You mentioned if I had thoughts on setup costs. I was a victim of that myself, because just before I met Rito, the last project I did was trying to launch my own fund. And the $500,000 minimum Rito talked about is if you're managing your own money. But as I guess most of you would know, if you're setting up a fund that requires managing third-party money, the startup costs start to get very expensive. North of, well, actually, if we look at it in a different way, it basically starts to look like today launching a fund requires a minimum assets under management of 200 million And I mean, most people struggle to get that amount of money up front, and it's a shame because a lot of people want to have a go. And I think what's really attractive for when I met Rito and I saw his vision of what he was trying to build, from my perspective, what's really interesting is there are people like me who have always worked for a firm trading someone else's capital and wanted to have a go at it themselves to build their own audited track record, which they can take away with them. And it's very hard unless you have someone willing to back you, with some serious capital from day one. So, using this technology for me is very exciting because you can suddenly automate and eliminate a lot of the fixed costs. You can massively reduce the kind of variable costs. And when you start to reduce costs, you can also think about reducing crazy management fees to investors who essentially at the end of the day are just savers who are trying to create wealth or preserve capital.
Mm-hmm, mm-hmm. Thank you. So we have a question from Alexander Felix in the chat. It says, if using Ethereum, can you only trade Ethereum-based tokens? And that kind of goes back to the more general question of like, what are the core issues to solve when you're implementing an asset management platform in this way? So if you could talk a little bit more about.
Sorry, when you're implementing an?
So when you're doing a decentralized asset management platform, as opposed to just being like a centralized app, right? So you've made a choice of platform, and the question is, are you then only limited to trading Ethereum-based tokens? So one issue could be like scope of the kind of asset that you could trade, and maybe there are other core issues as well.
Yes. For now, this is kind of the case. There are already protocols, well-known protocols, which allow kind of this trading across blockchains, like this cross-chain or atomic cross-chain trading protocol or so. So these technologies and ideas already exist. They're just kind of waiting to be implemented. However, this is only true for, this is not true, but this is especially easy for blockchains that have some sort of smart contract capability. So to kind of use the Bitcoin blockchain is a bit harder because they don't have that. But then there's BTC Relay and projects like this that, ultimately, probably it's most likely it's just a matter of time until this will come as well.
Mm-hmm. So you're kind of saying that as you launch, like immediately you're supporting Ethereum-based tokens, but ultimately kind of interoperability solutions will come along and enable you to combine different blockchain assets into the same portfolio.
Absolutely, we believe so. Yeah.
Right? Yeah. So to my knowledge, right, like BTC Relay, I think exists on Ethereum today. There's a couple of projects like I'm thinking Interledger that kind of creates a common API where you're able to query and make transactions across different blockchains. So that could potentially be useful. And then I suppose, in the interest of launching early, you could do some kind of semi-decentralized setup, right? Where you can go and obtain those assets yourself in a centralized manner. So that goes to execution. How does execution work on a decentralized?
Yes, so we're not trying to have a centralized solution, not even semi-centralized.
You guys gone all the way.
Okay, yeah, okay, fair enough. Like if we use price feeds, then we already have it. But we try to limit it as much as possible. So there are already great projects like Exodus out there who kind of have these semi-centralized solutions. But we're kind of extending this, like it's purely implemented in smart contracts, meaning like the only way you can manage is within the rules of the protocol. The same way you only can send a Bitcoin transaction if it's within the rules of the Bitcoin protocol.
Mm-hmm.
So ultimately that should bring trust to a minimum.
Right. Do you see one reason that you mentioned for not using Bitcoin is, I guess, was it just the speed, the throughput of the blockchain? Does that suggest that there are kind of issues with timely execution? Like, is that, if you go into traditional funds, a lot of hedge funds play on extremely low latency kind of strategies, right?
Yes.
In this context, like, what is sort of the speed or throughput that you're trying to aim for?
Yes. For now, it's limited to the underlying blockchain, so we cannot outperform the underlying blockchain. So that means for Ethereum, that's according to the yellow paper, 10 to 19 seconds. Yes.
Okay. And what about data? So data would be another like serious consideration, right? Because of at least I guess semi-trusted oracles that deliver market data for your assets. It's hard to charge transaction fees and to like know its worth. How are you thinking about that problem?
From kind of correctness of data point of view and from an incentive point of view. Okay, I'm gonna guess that's a yes. Okay, so correctness of data, essentially, like the way we are building this protocol is that we have kind of this concept of a core and concept of modules. So kind of the modules are linked to the core. So the core has kind of the core business logic, and the modules have somewhat of an potentially opinionated logic attached to it. Opinionated meaning like you might want to have a certain kind of price feed, or you might want to just have the Kraken, whatever API as a price feed. You might want to use Oracleize as a price feed. You might want to have a combination of those two. So it's kind of opinionated. So the way we solve it is that we kind of let the users decide. So the user or the manager kind of picks this beforehand and then deploys it. And once it's deployed, he cannot change it anymore, at least for now. So as an investor, this really gives me a good feeling, because if I don't agree with kind of the price feed that the manager has chosen, then I'm not going to invest. So that's kind of the solution. That's kind of our solution to correctness of data. And then why would people build this? Why would people? I mean, we're gonna let other people build this, where we place no restrictions at all, so everybody can build this. They don't have to ask us to kind of add it to the protocol. They just can add it. And the reason why people might build this is because we incentivize them to do so. And the way we do that is, they can just code in a commission. However, this is a bit difficult. Like if your module is purely smart contract, then it's really easy, like, to just comment out this kind of fee structure. So we solve it with a second point. And this second point is we incentivize them by giving them an amount created by inflation. So this is very much similar to how almost every blockchain does it. If you look at a blockchain, like what makes blockchain secure is kind of the miners. But these people kind of invest in hardware. They have time and effort that they spend on this. So how to incentivize them to doing this? Well, you create an amount for them created through inflation and give it to them. So kind of everybody understands that this is needed. That this is kind of needed to incentivize them. So we are doing the same thing. If you build a module for us or for the Melon protocol, and this model is used by people, you get a reward for it. So how beautiful is this?
I think it's great. Talk to us about, I guess, like how you're thinking about funding this project.
Yeah, sure. So essentially, we're kind of letting people contribute. So we're gonna have a contribution period where people can contribute to the building of this protocol. People who contribute essentially get, it's very much like the equivalent of gas for Ethereum. So they get Melon for contributing, and then to use the protocol they need Melon to use it. All of this Melon is then collected and given to the module builders. So we never actually use, or we never receive any of these Melons used for protocol usage. So we just kind of collecting them and give them back to the module developers.
Right.
Yeah.
So is Melon an Ethereum standard token?
Yeah, absolutely.
Oh, cool. So what you're kind of saying is, like, you have this asset, you use it to incentivize. So its primary use is to do what? To create portfolios on the platform?
It's okay. So you can see it in two ways. You can see it as kind of utility, meaning you need it to use the protocol, the same way as you need Ether to use the Ethereum blockchain. Like you use Ether as in form of gas. I mean, it's the same, but yes. So its function, its utility function is, that you can use the protocol essentially. The broader function is future-proofing development. So having this token, having the ability to create inflation and give it to the developers, essentially future-proofs development.
Mm. Really cool. Okay, and then do you expect the value of the token to appreciate as the platform becomes more used? Like, what is the economic relationship there?
Yeah. So
so like I'm also asking about the, how does inflation
sure
kind of
sure
play?
So we have this contribution period, and at the end of this, so we issue kind of token for people who want to contribute, and after this contribution period, no more tokens are issued other than through inflation, like the same way that no more Bitcoins are issued, or no more Ether were issued after their crowd sale, or other than inflation, right? I mean, the Ethereum blockchain also has inflation to incentivize the miners, and we're also going to have inflation to incentivize development.
Mm-hmm. Cool. Just going over to the side screen where we have some questions. So from Nick. Hello, Nick. Says, great project, guys. Have you thought about how to manage the privacy problem that would allow someone to easily copy all your trades if they are published unencrypted?
Yes.
I guess open.
Yes, it's a good question. This is one of the problems. So essentially, it's mitigated a bit through the fact that if you're gonna copy, you're always late. So yeah. So if you have like, yes, so yeah, essentially late also translates into worse performance because somebody else can buy up some of the order book before basically the copy trader. But it's not fully solved. Yes, there is so much work to be done. Yes, but we definitely have an eye on it.
Do you see obfuscation of portfolios as an option?
Yes. I mean, there is probably a range of solutions. There might even be a solution but this is not fully thought through, but there might even be a solution using Whisper to just kind of state an intention, like an encrypted intention of wanting to buy. But yeah, it's probably something that will be solved sooner or later. But yeah.
Alex writes, why don't you guys raise part of the crowd sale specifically that will be dedicated to investing in the people who open their portfolio up to be visible to others? Then you guys hold the funds and allocate a portion of each trader, with the allocation being rebalanced based on their performance. That way you could reduce friction by consolidating all the trades and use a weighted ranking that then creates one portfolio that investors have access to. Traders get a performance fee on their allocation. I'm not sure I fully rock that. Do you guys?
Okay, so I'm trying.
Is the question basically, why don't you create a fund of fund around this, basically, where you try to invest in the best managers?
Right. It sounds like the suggestion is to pool kind of the best managers, allocate among managers, and then you get the benefit of basically doing trades that are higher volume trades, and so you pay, I guess, less fees, maybe, depending on what platform you're on.
I would say the answer is it's something we might do later. But right now we want to focus on the actual protocol.
Okay.
Yeah, I mean, we don't have a crowd sale. We have a contribution period. So, I guess the question is kind of in the direction so that people are more aligned to use kind of the protocol and to add value to it. Yeah, I mean, I guess, yeah, Mona and I can think about it.
Okay. I think it's an interesting idea just from the standpoint that, like, you know, in economy, you have, well, at least the roadmap has both kind of individualized portfolios and a managed portfolio that's being done by the company. So in your kind of decentralized asset management analogy, this kind of decentralized but pooled vehicle would be kind of analogous to the standard fund or something like that.
I mean, the portfolios we let people build, they have an underlying ERC20 compliant token essentially as well. So with our protocol, you also can make funds of funds.
Right. So you're kind of saying that for any given portfolio, that portfolio maybe literally satisfies the ERC20 interface.
Absolutely, yeah.
Or you can trade
absolutely
pieces or the entire portfolio with other people.
Absolutely, yeah.
Okay. Very cool. Thomas asks, is there already a roadmap, and when will we see a beta website?
Yes, there is a roadmap. For now, it's, I guess, internal. We will have a beta before the contribution period. So again, it goes very well with our, I guess, values of we don't want you to trust us. Like we want you to see a product from us, and then you can decide if this is worth contributing to or not.
And sorry if you already answered this kind of implicitly, but how long is the contribution period?
It's probably going to be a little less than a month. Maybe, and this is sort of, yeah, it's still debated. It might be a bit longer, but more or less a month, I guess.
Got it. And just again, for my understanding, because I'm like the slowest one here.
You're perfectly fine. So
the contribution period is the period where you're kind of handing out Melon tokens to people who have proposed modules for the platform.
No, it's just so these Melons are going to be needed to use the protocol, but it's just so So if you like the project, if you like what you're doing essentially, and you want to contribute, this will be a way to contribute. So, but for contribution, you actually get something back, which is you get to use the protocol with these tokens.
Nick writes, when I allocate funds into a new Ethereum token, will the whole amount be bought using one market order, or is there a way to manage how you trade into a position? In other words, an execution strategy. Would execution strategies be supported?
So that's a great example for off-chain services. So this could potentially, this can be done via smart contracts, but then it's really open. So you might not want to have your trading strategy on the blockchain. So the way to do it is kind of build these off-chain services, which everybody can do, and they can be closed source if so wanted. And then these off-chain services would essentially allocate.
Mm-hmm. Cool. So can you guys just talk a little bit more about like your individual backgrounds and how you came together and what your individual roles are, you know, in the company?
Sure. You want to start, Mona?
Okay.
Yeah, Mona, we haven't heard too much from you.
I started my career as a equities trader in London with Goldman Sachs. I was there for 8 years. So I was market making and prop trading for them in several asset classes, but mainly cash equity. That branched out later. And then I was hired by one of our clients to work to be a fund manager with a hedge fund called Jabra Capital in Geneva. I was responsible for running a long-short equity strategy there, and then I was there for 4 years, and then I was offered some seed capital to try and launch my own fund, and I tried to do that for 1.5 years, but given all the kind of costs that I incurred, it didn't make sense to continue it unless I had a much larger investor alongside. So I think I got to a peak of $30 million in assets, and I couldn't get above that, and I couldn't. Yeah, it was hard. It was hard to cover all the running costs without more investors. I then, after I wound down the fund, I had sort of this nagging feeling for the last month that I wanted to learn more about the blockchain space, but I never really had the time. So after winding down the fund, I decided to take 1 year off and just to purely learn about blockchain. And through this kind of period, I guess, through going to a lot of meetups and open lectures and events in Switzerland, I met Rito, and I started helping out on a sort of voluntary basis a few startups and trying to overlay my experience with theirs. And pretty quickly, I thought Rito's idea was really fantastic, and I tried to help him develop it. And in February, I sort of encouraged him to leave his job and to focus on this full time. And he did. And then in June, or maybe a bit before June, he asked me to help him full time and stop focusing on the other startups. So we kind of came to an agreement, and we've been working together full time since.
Cool. What about you, Rito?
Oh, sure. So I have a background in mathematics at the Swiss Federal Institute of Technology. And while I was there was kind of this. So I guess there was kind of this thing called blockchain, which was really fascinating, still is. And kind of just, I guess I understood it early. I understood what it would mean for kind of the finance industry. So I decided I don't want to be a banker anymore and kind of do this. So I dropped out. Before I dropped out, I kind of was working on a side project, which was kind of a trading alg for sports betting exchanges. So so after I dropped out, I kind of developed it, and I ended up with a software that just made money, which was kind of cool. Yeah. Then I invested early. I invested early in Ethereum, and yeah, I went on and worked for Brainbot Technologies, and now this.
Very cool. So I have asked you guys a lot of like factual questions. Maybe we can go into a little bit more aspirational, general questions about the space. I know that you guys went to DevCon. I went to DevCon. We crossed paths there. What was kind of like, what were some of the highlights for you guys and your product in terms of the things that you saw there at the conference?
Yes, one of my personal highlights. I mean, other than the stuff that Parity does, which is always fascinating. ETH Core. It was, I guess, Imandra was very impressive. Formal verification, which is very interesting for us for obvious reasons, right? We want to make this as secure as possible. So we're looking very closely at formal verification for sure.
Did you find out about projects that you weren't aware of before that are kind of in a similar space?
That's a good question.
Did you guys meet the economy guys, by the way?
No.
Okay.
I haven't.
I think we also talked. So we talked about economy. We talked about. I think there was something called crypto decks, right? Is that what you mentioned to me? Is that a similar idea?
Okay. What are they doing?
No, actually, Rito, you might not. Crypto decks, we do know them, and we've actually, we know those guys quite well. Actually, at least I've had a few conversations with them. I don't think it's different in the sense that we're building a protocol, but potentially they would be another application on a fund management protocol. So I think they have similar ideas to us. I think the protocol, as we maybe envision it, hopefully takes a life of its own. But then everyone's sort of, there'll be the Melonport face to it, but then there could be other variations of it, and anyone's kind of free to integrate into our backend or build their own. But we are aware of them, and we think they're great.
Mm-hmm. Okay, very cool. So there's obviously like, at least a couple of competitors in the space that are working along similar lines of portfolio construction. Now let me ask you another kind of aspirational question. In this context
if I may jump in, like we're very, like the way we're building this, we're extremely open. Like we're extremely open for collaboration. So just to kind of put that out there.
Right. That's certainly good. I think like a lot of, if not most, the majority of the projects in the space tend to take a really open, firstly a source and open community kind of approach. That's actually one of the reasons that we, at CoinFund have an open Slack, which is strange for either a research company or an investment company. But we felt that like that culture of openness that we see in the companies that we talk to and study was an important element, and so we follow that. We follow their lead there. In the context of people kind of competing for best returns, best portfolios on your platform, just generally looking at how the space has been going and seeing how, certain times in the space are so exuberant and you're, very rewarding in terms of, potentially rewarding in terms of returns if you're in the right asset. and then other times are periods of destitute kind of depression, such as like what happened after the DAO and the fork. You know, do you guys see people competing on what factors? Is it because people know how to identify projects well, or is it because they're sort of accidentally in the correct asset? Or like, what is the skill that's going to be most important to being the best, you know, portfolio manager on Melonport?
I think it's a range. It's a range of skill sets, and you don't need to have them all to be very successful. You know, there might be a few hackers out there who are really good, kind of understanding the technical side of these crypto assets. And they just invest based on this. They just invest based on what they believe the next thing will be, or they just invest what they believe the next thing has to be. And then there might be people who are very well connected, like they just have, I guess they're very good in collecting information and then just invest based on this. There might be a mixture of it. Yeah, I'm probably forgetting 7 of these skill sets, or not even aware of some of them. But yeah, I think it's a range of skill sets.
Mona, what do you think? Given that you know, these assets, they're not stocks, they're not traditional commodities or effects. You're dealing with a completely new asset class when you're coming into this platform. How do you think people will get an edge in trading?
I mean, it will be interesting to see. I'm cautious to like overlay the same skill set that you would need to be a traditional fund manager, because I do think there's a much, you know, there's a whole range of other things to consider here. I think the technical side will be very interesting. I think the 2 points Rito mentioned are highly important. I think kind of a form of discipline, overlaying some kind of discipline and risk management, knowing what you know and what you don't know. Yeah, I mean, you know, this space is going to be brutal, but this is why it's so interesting. And maybe this is also why we don't want to create a fund to invest in some of these portfolios, because this is I mean, for as far as I'm concerned, this is a skill set that's very unique. It's not the same as creating and managing a portfolio. Selecting managers is a business in itself, and there are people who have more expertise in that than I do. But it will be interesting to see which style of portfolios performs.
Cool, that makes sense. So we're coming up on an hour. Does anyone else who's currently online, would you guys like to turn on your videos and ask a question before we go? Anyone? Okay. I know
that, if that's okay.
Hello.
Can you guys hear me?
Yeah.
Yes.
Hey, thanks. Good to see you guys. Rito, I met you in Shanghai, so thanks for talking to me there.
Thank you.
I've been dabbling in investing in crypto for a while. Friends and family always saying, "Oh, you know, we take some of my money, and the legal implications and all the hassle of it," as maybe say no. But if I had something awesome like you guys, you know, if they want to invest whatever, a Bitcoin or two into, you know, my crazy gambling, then that would be great. So I think it's a fantastic thing. I've got a background. I used to work at a hedge fund, so I know a little bit of the technical side about how some of the stuff works. One question I had was, when you define a portfolio, I understand that in the first version of what you're building, you're going to be able to kind of lock down at the beginning as to what assets you can actually invest that portfolio into. And one of the things that, at least I like to invest, is I look at, you know, the new up and coming see what projects are out there, but invest into something in your portfolio that didn't exist at the time when you defined the portfolio. So I understand the need for security, that you can't just make, you know, whatever NIC tokens and put all the portfolio into that at some point and run off the money.
Right.
Something like a contract or a group who can expand the set of allowable investments for a portfolio. I thought of I just want to know what your thoughts were around that. Thank you.
Sure. Thank you. So for now, we can't. Yeah, as you say correctly, like managers have to pre-select the assets they want to trade in. So future ICOs, we cannot predict kind of the public addresses of these tokens. So for now, it's not possible. Probably not even in the future, because it's very difficult to predict these things. However, that it doesn't mean that it has to be static. So if you look at Augur, for example, and you want to trade in Augur markets, then there is a way to do it. Essentially, build functions that dynamically can crawl the addresses of Augur markets in a completely decentralized way. So yeah, so this is possible. It's basically a security trade-off. So essentially, you can build in this asset module that you want to be able to extend your asset universe. However, this might come at a security cost. Yeah, I hope this answers your question.
Yeah, great. And in fact, talking about Augur or prediction markets, I love the idea that maybe my portfolio can also include
Did we lose Nick?
Yeah, but if I had to guess the question, then yes, you essentially can make portfolios just with Augur markets. So yeah, I hope that was it. Okay.
Cool. Does anybody else wanna ask a question before we take off? All right. Awesome. Well, guys, thank you so much for taking an hour to do this. It's been like super fun. We're excited about your project and the vertical, and look forward to monitoring your progress and participating as token holders.
Thanks very much. Appreciate it.
Thank you, guys. Appreciate it.
All right. Thank you, guys.
Bye.